Hello, I'm Brad and I'm here today with Maximus. Welcome to the 5th Kinesis Community Show.
Okay, first I need to walk you through our disclaimer. This is a community-led show. Some of the presenters and panelists may be invested in Kinesis. Opinions presented are their own and do not necessarily reflect those of Kinesis. While we have made every effort to make sure the information presented is accurate, we take no responsibility for any errors or omissions. The show is for educational and entertainment purposes only. It should not be taken as solicitation to invest in any elements of Kinesis or anything else. Do not invest in anything without doing your own thorough research and due diligence.
Thanks, Maximus. We have 2 segments this week, so we're going to jump straight into the first. This is a piece where Uchiki goes through the main alternatives for getting a yield on your capital.
I'm going to talk to you today about conventional yields. Bank savings rates in economies with stable currencies are about 1% per year at the moment. Unless the bank interest rate is above the inflation rate, then your capital will be eroding in value. Remember that deposits in a bank are on the bank's balance sheet. If we have another financial crisis and there is a bank holiday, then access to funds might be limited. Bail-ins would also be possible, which could lead to loss of apparently safe funds. We have not yet seen how national deposit insurance schemes operate under really stressed conditions. Buying bonds from stable governments or high-quality companies will usually provide a fixed income, with the rate set when the bond was issued. At the end of the term, for example 30 years for a US Treasury bond, the face value of the bond will be repaid. It is generally possible to trade these bonds before the term is complete. If interest rates go down, the bond becomes more valuable because it is paying a relatively higher rate, and buyers will be prepared to pay a premium over the face value. If interest rates go up, buyers will only be prepared to buy at a discount, so you've got potential capital loss there. Although the face value of the bond is repaid at the end of the term, the risk for longer term bonds is that this will be worth less in real terms. Dividends are available from certain shares on the stock market. The dividend amount will depend on company profits. The percentage depends on the share price. Share prices can rise or fall significantly, not just based on the company's performance. Take IBM as an example. The dividend is about $6 per year. This equated to 3.7% in early 2018, but the share price has dropped 25% since then, so now the dividend rate is 5%. Dividends from shares can protect against inflation. Liquidity in quality shares is usually good. With rental property, the costs of maintenance, insurance, taxes and possibly loan servicing need to be balanced against the rental income. Over time, a property will generally maintain its value in real terms. However, property isn't a very liquid investment. Let's have a quick look at K-coins. The yield will depend on velocity in the Kinesis monetary system. At a low 5% velocity, the yield would be just under 2%, whereas at the projected 30% velocity, the yield would be nearly 12%. Unlike paper money, gold and silver will maintain their value in real terms. K-coin holders have allocated title to the underlying bullion, and this is held securely outside of the banking system, but is just as liquid as a bank account. So, no counterparties, pretty solid yields, and easy to spend or transfer.
That puts Kinesis nicely in context. Remember that with Kinesis, you have direct title and no counterparties.
Well, there's been a lot happening since our last show. Here's a quick roundup of highlights from the Kinesis team's recent activity. Kinesis will be a partner in Elysium City, the first major smart sustainable city project in Europe. Also, Tom spoke briefly but eloquently at the Latino Impact Summit. I'm looking forward to hearing more about Kinesis in Latin America.
A significant partnership with crypto exchange MBAex has been announced. MBAex has 1.3 million traders based in Southeast Asia. MBAex will be promoting K-coins as superior stablecoins to its clients. A further partnership was announced with the Jakarta Futures Exchange. This will develop an Indonesian regulated blockchain exchange using Kinesis technology.
The Kinesis team were pitch winners at the Monaco International Blockchain exhibition, for which entrepreneur and blockchain expert Evan Luthra contributed the generous prize money. Evan has now joined the advisory board. The team spent several days meeting and networking in Dubai and the UAE. As a result, Tariq Al-Habtoor joined the advisory board. Tariq is a significant member of the Al-Habtoor group. Have a look at their corporate video. Patrick Davis also joined as general counsel. Patrick has impressive legal experience in financial and commodity markets.
There was a great interview article with Tom in financial publication Forbes. There have also been several articles by Hatu on Steemit and continued coverage at HowToToken. Now we have an excellent new segment by Gary. This explains the problems of ongoing inflation in fiat currencies and how Kinesis provides a solution.
Have you ever asked yourself, why do the price of the things you buy always go up over time? Is there some natural order of things that makes this so? It really doesn't make sense. Take for instance at the grocery store. In the past, doesn't it seem your money stretched further? Buying more and higher quality foods to meet the needs of your family. It's clear that today, technology has advanced significantly from the past, and it is continually improving. The use of better technology in the production of goods should drive the cost to produce them down. This should then lead to lower prices that we pay at the store. But obviously that's not the case, because prices continue to rise year after year. Why are prices continually rising then? Well, it may surprise you to learn that the cost to produce goods are not really going up as it appears. What's really happening is the value of the currency that you are using to pay is going down. This requires you to use more of those currency units, such as dollars or euros, to obtain the exact same goods as you did in the past. This is called inflation, and it can get really ugly. Enter Kinesis money, an evolutionary monetary system that reintroduces gold and silver as global currencies. Gold and silver have historically, over thousands of years, been used as money and has maintained one's purchasing power over long periods of time. Kinesis utilizes blockchain technology to make spending gold and silver efficient, transparent, and cost-effective. The Kinesis monetary system can be used to pay for transactions as simple as purchasing a cup of coffee. This can be achieved by conveniently using one's mobile phone or even a debit card. Want to make a bigger purchase? Kinesis has the flexibility and scale to even purchase your dream sports car. And again, all from the convenience of your mobile phone using your Kinesis account. To learn more about Kinesis, go to www.kinesis.money to get more information.
That really was a superb video, Gary. We've just got time to look at some conceptual merchandise pieces. I'm going to put on my Kinesis Christmas sweater now. See you next time.